This is a market review for February 14th, 2025. Uh, Today is a Friday. I was expecting a TGIF, meaning a 20 to 30% retrace on the weekly range. We did not get that, in fact. We got a pretty decent expansion and kind of messy markets, if I'm going to be a little honest. On the daily, as you can see, we had a little sell side wick here with this, but then we mostly just expanded up above. Well, more than we did yesterday. So we go down to the hourly. So going in today, I was bearish for many reasons. The first one being TGIF, like I explained earlier. Second one being this. Price was playing bullish. Boom, London started. Price continued to play bullish. And then we switched to bearish, right? So in my mind, London reversed. So New York's going to continue. That aligning with the higher time frame bias of bearish led to my bias. So I was expecting price to retrace up. Sounds good. I was also expecting price to retrace off of this hourly as an inverse because it was validated there. But what we ended up doing was London played bearish, tapping into this 1 hour here, expanded higher, and then used this 1 hour as a reclaimed bullish fair value gap during lunch. So the lunch retrace hit this hourly, this one here, this hourly reclaimed bullish fair value gap, and then expanded higher. On the 15-minute, you can see better. We're playing bullish. London starts playing bullish and then switches to bearish. Maybe that's just how I'm seeing it, but it makes the most sense to me in this aspect to think about it that way. And then we retraced up, seeing very slow price action up, showing me weakness, meaning price wants to go down. And the market opened here. We ran up high, which is not what I was expecting. Retraced higher, retraced for lunch, took out these lows, and then expanded higher. Today was kind of a messy day. These right here didn't happen on ES. They were lower. This low on ES was lower. It was below like these, I think. ES also didn't expand this high. It's kind of a very, very decoupled day between the two averages. I was looking at this as an inverse possibly for my entry, which I'll get to on a lower time frame. I was expecting price to reject off of it here on this candle. So here's where I entered. Price came up here to this inverse, rejected, and I was looking at this part of this candle, this bearish part of this candle, but then price expanded higher and higher and higher. Now down on the 5-minute, what do I want to talk about here? Again, in my mind, London continued the bullish move, reversed the bearish. I thought this was a retrace, reacted off of it here. I'll get down to my entry on the 1-minute. But as you can see, price pushed higher and higher. ES did not make this high. In fact, let's show that. What high is this? I believe it's this one. So, 5-minute time frame, both of them. This high, 1010. This one. This high, 11 or 1050. 11. Right, close enough. Close enough in time. NQ made a higher high. ES didn't. Decoupled. Decoupled 1. Because ES did not make that higher high, it came down lower, almost to this 830 low. However, NQ did not even take out this 940 low, which is all the way up here on ES. So that's a sell side SMT. Now, the main one is after this 1010 high, ES made no further high for the day. Whereas after this 1010 high, on NQ, it proceeded to make 4, 5, a lot of higher highs. So that, in my mind, is a huge sign of unprobable trading markets, in my opinion. There's an SMT on the 1 minute, so we'll go down to that now. Now let's go over my entry. 9:30, market opened right here. As we can see, this price action is very undesirable, if I'm being completely honest. Price pushed up, continuing the retrace, as I mentioned. And as I mentioned previously, there's a 15-minute inverse here that explained these wicks up above the 1 hour. Now, if we pull up ES, go to this 1 minute. Where is it? This high here, 956. So this high is at 51, right here. And this high, which is higher, came at 56, which is here. See? The 56 high is lower on ES. 56 high is higher on NQ. In my mind, this aligned with my two higher time frame biases, aligned with the SMTs. Sorry, the inverse fair value gaps led me to thinking we're going to play bearish. So I was just waiting for an expansion, and we got it in this candle. And so I entered once this green candle entered back above this candle, and I got stopped out right here where I closed the trade because the candle closed outside of the fair value gap. Now, something that I saw live, which almost turned me off of the trade, was this rejection here. I'm not entirely sure what it was rejecting off of. It could be consequent encroachment of this body, or this candle here. But I didn't like how this rejected. In my mind, if I'm bearish, I don't like seeing large sell side wicks. It just from my experience has led to not bearish price action. It's rare to see a large sell side wick and see price immediately continue that way. See, look, boom, large sell side wick, played bearish. Large buy side wick to take this high, played bearish. Large sell side wick, played bullish. Large buy side wick, played bearish. Large sell side wick, played bullish. So large wicks on the side that I am going is not a good sign to me, because this right here, first presentation for value gap, is also a place where I was looking to enter. What caused me not to enter was this candle here. Price opened, dragged all the way down here, and then right as it was about to close, came all the way back up. And to me, that showed lack of weakness. And I want to be in trades where I enter and it just goes straight to my targets. And from my experience, trades or candles that have large wicks on the side that you are trading, so if I'm playing short, if there's sell side wicks like this one, that is not something that I'm looking for, if that makes sense. So that was that. This is all in the macro here. Played higher, again, SMT up here. We had this order block here, which price reacted off of, reacting perfectly off of consequent encroachment of this buy side wick right there. Again, reversing around 11, playing bearish, retracing up to this 5 minute. Lunch kind of did nothing. Then we took out sell side, creating this SMT, which caused us to play bullish. Again, this is the highest high on ES. So anything above this point is an SMT, which could be cause for a retrace. So boom, here SMT, possible retrace. This high being higher than this one, boom, possible cause for a retrace. Why didn't price come lower here? If I'm being completely honest, I don't know. This is very strong price action. Took out this high and not very substantially. I would have expected a larger retrace, especially given the price action today, but we didn't get one. Yeah, I really don't know why. If anyone has an idea why this wouldn't retrace lower, I mean, I'm happy to hear it. It's not below equilibrium, right? Not even close. Taps into the 5 minutes. Possible it's a lunch thing. Like the algorithm kicks back in, so it wants to continue playing bullish, so there's no need to go lower, like it doesn't have time to go lower. That's what we're going to go with for now. Then algorithm kicks back in, play higher, taking out these highs, one more high, and we retrace. Why retrace? Why we retrace again? This is an SMT around the macro. Possible that's why. This retrace goes definitely below equilibrium. Reacting off this 5 minute, expanding higher. Last hour of trading, we just took out internal sell side. So now we're looking for untouched buy side. And that is where the day ends. Now, as far as next week goes, since we did not get a TGIF retrace today, I'm looking for Monday to be very, very bearish. I am looking for next week to overall be bullish, but again, since we had no retrace today, I'm looking for a substantial retrace on Monday. We have this whole gap here, right? There, that can be traded into, retraced into. Volume imbalance here. Liquidity void here, but it's filled. This is all filled down here. So in my mind, this is the prime suspect for the retrace on Monday. Right? It also depends where it opened and what London does, because we can open discount and London can work down and then reverse, which would then cause me to play bullish on Monday. But as of now, I'm looking for Monday to play bearish because we are very extended here. And we didn't hit a TGIF retrace today on Friday, like usual. So that's what I'm looking for going into the future. Tradable day, yes. Prime conditions, no. I'm happy taking a loss on a day like today because it's the reason why no one can have a 100% win rate. Do I think today was avoidable? The loss today was avoidable? Absolutely. If I saw that large sell side wick and had enough experience to know and to realize that price was not willing to seek lower price, that would have turned me away from entering and would have saved me the loss. Things to learn, always things to learn. Losses are better than wins because there's something you can learn from. So always continuing to learn more, always continuing to keep an open mind at anything that can possibly be of use. So I'll see you all next week. And this has been your market recap for February 14th, 2025.